Welcome back to the Daily Crypto Roundup. Today's episode is all about momentum, because across the crypto market right now, we are seeing a clear push higher, and this isn't just one coin dragging everything else up. Bitcoin is firm, Ethereum is moving with conviction, altcoins are waking up, and sentiment has shifted noticeably compared to where we were even a few days ago. So the key question today isn't, is crypto pumping? It's why it's pumping, and whether this move has legs or is just another short-term burst of excitement. We're going to go through the prices first, so everyone's grounded, then break down what's actually driving this move, what analysts and on-chain data are saying, where whales are positioning, and what stories around the world of crypto are adding fuel to the fire. As always, we'll keep this grounded. No hype for the sake of it, no doom either. Just context. And quick reminder, we're still running the XRP giveaway, and the responses lately have been brilliant. We're picking winners from the comment section, so if you've got thoughts on the market, a bold prediction, or even just something to say about the episode, drop it in. Doesn't have to be clever, just be part of the conversation. That's how you get picked. It's our way of giving back to the community that's helping this grow. Alright, let's get into the market. Bitcoin is currently trading in the mid-$95,000 range, holding comfortably after a strong push higher earlier in the week. Ethereum is sitting just above $3,300, continuing to show strength and, importantly, holding its gains rather than giving them back. XRP is trading around $2.05 to $2.10. Solana is back in the mid-$140. Binance Coin is pushing toward the mid-$900. Cardano has climbed back toward the 40-cent level, and Dogecoin is hovering around 14 cents. The key thing to notice here is that this isn't a fragile market. We're not seeing big wicks down, panic selling, or sharp reversals. This looks like controlled upside, with buyers stepping in on dips and sellers failing to push price meaningfully lower. Bitcoin dominance has eased slightly, which tells us capital isn't hiding, it's rotating. And that brings us to the first big theme of the day. Altcoins are back in play. We're seeing strong moves across parts of the altcoin market, particularly in areas that had been completely ignored for months. Privacy-focused coins like Monero and Dash have seen explosive moves recently, with Dash posting triple-digit gains over the past week before cooling slightly. That kind of move doesn't happen in a dead market. It happens when traders feel comfortable taking risk again. At the same time, we're seeing accumulation in large, liquid altcoins. On-chain data shows whales adding to positions in Ethereum, Dogecoin, Chainlink, and Uniswap. These aren't random bets. They're assets with deep liquidity, strong narratives, and clear use cases. When whales rotate into those names, it usually signals they expect the broader move to continue rather than roll over immediately. Now, let's talk about why this pump is happening, because there are a few forces all lining up at once. First, the macro backdrop has improved. Inflation data in the US came in lower than expected, reinforcing the idea that the worst of tightening is behind us. Markets are increasingly pricing in a Federal Reserve that is at least done hiking, and potentially closer to easing than tightening. That matters for crypto, because Bitcoin, whether people like it or not, trades as a liquidity-sensitive asset. When money gets easier, risk assets breathe. Second, global liquidity has quietly improved. China has injected significant capital into its financial system to support growth, which boosts global risk appetite. That doesn't mean Chinese money is flowing directly into crypto, but it does mean the overall environment is more supportive of speculative assets. Third, and this is critical, institutional money is back. After weeks of outflows, spot ETFs suddenly saw massive inflows, hundreds of millions of dollars in a single day. That's not retail FOMO. That's asset managers, funds, and long-term allocators stepping back in. And once those flows flip positive, they tend to matter more than short-term traders. We also saw something else that always accelerates moves: short liquidations. As Bitcoin pushed through key levels around $94,000 and $95,000, leveraged shorts were forced out. Hundreds of millions of dollars worth of short positions were wiped, turning selling pressure into buying pressure almost instantly. That kind of squeeze doesn't start a rally on its own, but it can amplify one that's already underway. And this is where on-chain data backs it up. Large Bitcoin holders have been accumulating since December. Exchange balances continue to fall, meaning coins are moving off exchanges and into longer-term custody. That reduces immediate selling pressure and makes it harder for bears to push price down. So you've got easier macro conditions, improving liquidity, institutional inflows, whales accumulating, and shorts getting squeezed, all at the same time. That's why this move feels different from some of the fake-outs we've seen before. Now let's talk about what analysts are saying, because the range of views right now is wide. On the bullish end, you've got people like Arthur Hayes, who's gone fully aggressive with his outlook. He's arguing that if liquidity continues to expand and the Fed effectively resumes balance sheet support, even indirectly, Bitcoin could make a run towards six figures very quickly, with some extremely ambitious targets being thrown around. Now, those numbers are eye-catching, but even Hayes himself frames this as a scenario, not a guarantee. More measured voices are focusing on structure rather than targets. Analysts at Bitwise have said that if the market avoids a sharp shock and regulation doesn't suddenly turn hostile again, Bitcoin likely continues grinding higher through 2026. Their view is that the presence of ETFs has fundamentally changed the demand profile. Dips now have a buyer that didn't exist in previous cycles. Others are more cautious. Technical indicators like RSI have pushed into overbought territory on shorter timeframes, which means pullbacks are always possible. Some traders are watching the $92,000 to $93,000 zone as a potential area where price could retest before continuing higher. But importantly, even the cautious voices aren't calling for a collapse. They're calling for consolidation. And that's the difference between a bull market and a bear market. In a bear market, rallies are sold aggressively. In a bull market, pullbacks are bought. Now let's zoom out and look at some of the wider crypto stories that are adding to the narrative. On the regulatory side, the big headline has been the pause around the US Clarity Act, the market structure bill designed to finally define how crypto is regulated. Coinbase pulling support spooked some people initially, but the market's reaction was telling. It barely flinched. That suggests traders believe regulation is a medium-term story, not an immediate threat, and that whatever happens with legislation, crypto isn't going back to square one. Outside the US, the picture is arguably even more positive. South Korea has moved forward with legalizing tokenized securities, effectively embracing blockchain-based versions of traditional assets under a regulated framework. That's a major signal from a technologically advanced economy. Even more interestingly, adoption stories are continuing in places under economic pressure. Countries dealing with inflation, currency weakness, or capital controls are seeing crypto usage surge, not for speculation, but for survival. That's not bullish in the short-term trading sense, but it's incredibly important for long-term relevance. We're also seeing crypto creep further into traditional finance. A major US mortgage lender has announced it will allow crypto and crypto ETFs to be counted toward mortgage qualification. That's a subtle but huge shift. It means digital assets are increasingly recognized as legitimate wealth, not just risky side bets. So where does that leave us? Right now, the crypto market is in a strong, constructive phase. This isn't blind euphoria, but it's not fear either. The pump we're seeing is supported by real flows, improving macro conditions, and renewed confidence from larger players. That doesn't mean price goes straight up forever. Volatility is part of the game. Pullbacks will happen. But the underlying structure looks healthier than it has in a long time. The key things to watch over the next few days are simple. Do ETF inflows continue? Do whales keep accumulating on dips? Does Bitcoin hold above key support levels? And does Ethereum continue to outperform, signaling broader risk appetite? If those boxes stay ticked, this move has room to run. As always, stay level-headed, don't chase green candles blindly, and don't let short-term noise shake long-term conviction. Drop your thoughts in the comments, make sure you're in for the XRP giveaway, and let us know what you're watching next. Thanks for listening. We'll see you at the top.